founder of Secure Finance. I used to work at the finance industry for 17 years. I was leading FX and interest rate derivatives. And I actually moved to computer science and spent 5 years and get a master's degree. So basically, Secure Finance is an interbank grade peer-to-peer bond trading platform. There's no Bitcoin denominated bond trading. Primary or secondary market doesn't exist, but that's what we're building. So before getting into detail, let me play.
Finance in the next few decades is going to merge with computing in a pretty deep way. Web3 and crypto represent this amazing opportunity to rewrite the rules in how economies and governments work. And so it's a combination of computing and the power of the computing platform.
But the finance market is larger, much larger. And clearly we are missing capital markets. And as a Secure Finance, we want to extend this maturity to longer, let's say 5 years. I realized change needs to happen when I saw a LIBOR scandal where a group of bankers manipulated benchmark interest rates that's governing a $1 trillion scale of market. That was the reason why I decided not to go back to traditional finance. What's missing in the DeFi space is clearly the yield curve, which is considered to be a continuous plot of interest rates over a time axis. We can build yield curve for any currencies as long as we have strong economic demand.
What first impressed me about Secure Finance, I think, is the team's level of professionality, level of knowledge. I worked at Goldman Sachs for 11 years. GSR is a trader, investor, market maker, and ecosystem partner. I think the future is very bright for institutional entry into crypto. The user won't be just merely seeing one number, getting feedback in terms of what their yield would be, given different risk factors, and be able to produce a lot more diagnostics on the success of their lending profile.
Secure Finance is for many different uses, from retail to institutional. By combining blockchain technology and traditional finance, we can actually create a better platform and a better world.
The future of finance is here.
So thank you very much. So when I see the previous DeFi summer, I observed the entire DeFi space, and I find out something is huge space is missing, which is the long-term capital markets. And a lot of successful DeFi projects is creating a pool and basically the AMM model. But actually, from the interest rate expert point of view, we are clearly lacking the fixed rates market, and that's what we are building. But actually, it's not really easy. So it's basically the banking field. We have to take care of the long-term credit, etc. So it's not really easy, and also not even for the single bank thing. It's more like a network of banks. So it's more like if you look at the interbank market, Goldman Sachs, JP Morgan, they make the transaction on a peer-to-peer basis. So actually, the decentralized finance exactly happened already. So I try to replace this relationship, building the infrastructure using blockchain technology. So creating the network and replacing this interbank network with blockchain technology. And the bank is nowadays pool-based DeFi projects. We are creating an infrastructure and connecting those pool-based DeFi projects to have a more solid infrastructure for interest rate market. So it's basically we are having this standard of 1 year, 2 years, 3 years, and then just connecting the deal. But it's not really easy to connect actually. We need to have a more arbitrage-free pricing model, which is order book based. We are fully on-chain order book based on the market. So that's where we're achieving composability. And these are the standards, so you can take a look at our website, but actually that's what we're building. We are fully collateral-based loans, and the second step would be NDF, non-derivable forward. So after this, forward loans and forward FX is totally possible. That's how we can achieve billions to trillions in terms of market. So we're going to announce tomorrow, we are finally going mainnet live. So we start off with Global Itayose, and 2 weeks later, we will open up the first ever crypto-denominated bond market. So please join and celebrate together for the great market opening. Thank you very much.
And now, any questions from the judges? Hello? Yeah. Okay. Thank you very much for the pitch. So, could you help share more on like what's your competitive advantage over the other players in the market?
Yeah, the competitive advantage is fully on-chain order book-based interest rates finding. So we are not relying on the pool-based system. Pool-based system is local interest rates, but the order book system, these interest rates represent the entire market. And this interest rate is very, very high quality, and we can use this as a reference rate to make the derivatives market, so that we can use this interest rates, reference rate, to make the interest rate swap and the forward market. But if you rely on the pool-based interest rates, it's not really possible to build the derivatives. So that is the fundamental difference that we can propose.
So what securities particularly are going to be trading here? Is it like, and then that's the first question. So like bonds of what exactly? And then two is where you're sourcing the liquidity from.
Yeah, so we chose Bitcoin, Ethereum, Filecoin, and USDC as a first trading currency. It's denominated currency. Bitcoin denominated bond, zero coupon bonds. That's what you can trade. Liquidity is basically everyone can provide place the limit order. We incentivize all the users by providing token incentives. So that's how we can achieve liquidity.
Okay, and it's a spot-based order book on what? On Ethereum?
Yeah, this is on Ethereum mainnet, but it's different from spot exchange. Spot currency, it's more a bond, so it's not Bitcoin itself. It's a Bitcoin denominated.
So it's a zero coupon bond. Let's say it's like denominated in ETH, but basically I can swap the rates, right?
Yeah.
If I'm bullish or bearish on rates.
Oh yes, exactly.
Okay, but so what's the plan to source liquidity? It's like token incentives for people that.
Yeah, basically token incentives. It's basically the liquidity incentives, and we work with basically like GSR, and we have a network with traditional finance people who is waiting to enter into this market. We also strategically chose Filecoin storage providers. They really want to borrow. So they're waiting for borrowing and also lending out, so that we start off with the real economic demand rather than just the speculators. So we definitely need to start off with the truly economic demand. So that's how we can start off with just building this robust market and liquidity.
Any further questions? So just a little bit on the roadmap on the product, if you can share more.
Yes. So this year, this December is just main launch. We have 20,000 users already, and then next year we're going to expand tokenized bonds. So basically, after tokenizing this zero coupon bond, you can trade freely on Uniswap like a zero coupon Bitcoin bonds with zero coupon Ethereum bonds. That's the second step, and then third step is definitely using this interest rate. You can start providing, spread product or derivatives product, interest rate product, and probably Bitcoin forward product is maybe we can gain a lot of traction from here, because everyone wants to hedge the price, lock the price. So I think we can create a long-term hedging solution for institutions.
Can you just help me understand, so the bond specifically, right? So I think this asset doesn't actually exist on chain at the moment, what you're trying to achieve. So how the bond works, I'm guessing, is it's a promise to deliver me Ethereum in a year, and you're saying that the market is going to infer what the interest rate on that is going to be. But for something like Bitcoin, where there's like minimal sort of cash involved, how do you envision this bond sort of working?
So as security finance name suggests, it's basically everything is collateral based. So everyone who wants to borrow needs to pledge collateral in USDC or something in the beginning, and then they can borrow Bitcoin or something. And our smart contract, manage the user's collateral, and then the smart contract acts as a bond issuer take care of issuing, minting, and redemption, and also clearing counterparty. So we solve this liquidity issue by replacing peer-to-peer to peer-to-peer counterparty to peer. In this way, we can achieve the secondary market liquidity. The same way Aave solved the problem with peer-to-peer into peer-to-pool. So it's very, very same idea, but with more order book-based liquidity solution. Yeah.
Okay, thank you.
Thank you very much.
A round of applause, ladies and gentlemen, for Secure Finance, our first pitching. The regional cup of the Startup World Cup goes to Secure Finance! Woo! Secure Finance, congratulations to your team. Congratulations, wow! To win the prize of $1 million US. Wow!